Weekend reading, salary versus dividends edition. One big decision I need to make as I transition from salaried employee to entrepreneur is whether to take a salary from my business or pay myself dividends. I set up a corporation for my online business back in 2012. My wife and I are 50-50 owners of the small business, and we've used the corporation to stream dividends to my wife for the past 7 years. I earned a salary and my wife stayed home full-time, so this structure allowed us to split our income somewhat and save on taxes. We'll need to change things up next year and decide whether to pay ourselves a salary, continue to pay dividends, or come up with some combination of the two. Pros and cons of a salary. The main advantage of taking a salary from the business is that it will give us a personal income. That means we'll pay into CPP, and also earn contribution room for our RRSPs. A salary paid out will also be a tax deduction for our small business. One potential disadvantage is the pain in the ass factor of setting up a payroll account with the CRA and filing all of the related paperwork. We'll also have to pay into CPP twice as both the employer and the employee. Finally, personal income is taxed at a higher rate than dividend income, potentially increasing our tax burden. Pros and cons of dividends. We'll definitely pay less personal tax since dividends are taxed at a lower rate. My quick estimate is an average tax rate of 13% with dividends, versus 27% with a salary. We'll also save money, today, by not paying into CPP. Dividends can be declared at any time, helping smooth out our cash flows throughout the year, and optimize our tax situation come tax time. Paying dividends is fairly straightforward. We simply write a check to ourselves and then update our corporate minute book. The disadvantages of receiving dividends is that we won't pay into CPP, which will lessen our entitlements in retirement. We also won't have eligible income to create RRSP contribution room. Salary versus dividends. Why not do both? An accountant once told me to pay ourselves a salary up to the RRSP contribution maximum and then top up with dividends as needed. He also suggested to leave as much money in the corporation as possible to keep taxes low. Reality check. The RRSP contribution limit is 18% of income, up to a maximum of $26,500, 2019. To earn the maximum deduction limit you'd need income of $147,222 each. That's not going to happen. A more realistic approach for us would be to pay ourselves enough salary to max out the year's maximum pensionable earnings (YMPE) for CPP. The CPP maximum for 2019 is $57,400. We plan to pay ourselves between $66,000 and $70,000 each to meet our spending and saving goals. So we could pay ourselves a salary of $57,400 and then top up with dividends for the remainder of our needs. This hybrid approach would allow us to max out our CPP benefits, while also creating $10,000 each in RRSP contribution room per year.